I think it's actually a pretty Goldilocks type number. If you asked me what was going to spook the Fed, I'd say something well north of 4%. I'm hoping this doesn't do that, but we'll see how that plays out in the next few days.
Jim, does it spook the Fed?
No, I don't think so. Listen, I'll take my chances. I would like to have seen a bigger number. I'll take the 4. I'm sure this administration will take the 4. What I was looking for is how much of this number was going to be sort of, soybeans is going to be the trade stuff. How much was going to be sort of kind of the sugary stimulus stuff? I think we saw that in the consumer numbers. But I was hoping really to see better investment numbers, better equipment investment numbers. That's where I think sort of the supply side oomph from the tax cuts, you really want to see hints of that, and I don't think we saw the hints. Maybe Steve disagrees, but I didn't see it there.
Steve?
Well, Jimmy, you got 7.3. I mean,
I'm pretty happy
with that. Look,
the equipment number's not great.
And I'll say some of it, by the way, is likely going to be from the oil and gas industry. That's another thing we kind of want to separate out is how much of the pop we're getting. Look, we've talked to a lot of folks out there who come by CNBC, interview people who we interview on air. They say that the tax cuts only change their investment plans at the margin. I'll take it at the margin if that's what's going to be, and it's going to lead eventually to.
I'm not sure the White House thinks that.
What's
right?
that?
Does the White House economists believe that? Does Larry Kudlow? Because what they've been saying is that it's not a marginal thing; it's a significant change, and
Jimmy,
that we should eventually see that.
Jimmy, let's be smarter than the politicians here, okay? If Kevin Hassett is right, and I'm willing to give him a little bit of rope on this, which is the politicians are stupid to claim that what we're seeing now is the tax cut. It has been stupid all along for them to say that. Because the idea of the administration here is you have like this 3-step process. Step 1 is you cut corporate taxes. Step 2 is you create higher investment. Step 3 is you have a productivity boom that changes the potential and DNA of the economy.
That's a long-term process.
That's a 2 or 3 year process. So why are they coming forward now and saying, look, the tax cuts are working? It almost opposes their very idea of how they think this process works.
No,
so
it undercuts their argument. It undercuts their argument because if next quarter we get a 2.4, what? Now the tax cuts aren't working?
Right. So I just think it's stupid. I think there's a little bit of tax cut, there's a little bit of sugar high, a little bit from all sides here. And I take a step back and I'd go with what Mohammed said, which is a 2.5 to 3 number. And by the way, I'm sorry to keep yakking here on this thing, but that's a huge success. To raise the growth rate of a $20 trillion economy by half a point, I will take that trade all day long.
Mohammed, you've been quiet thus far.
So would I, and if I was trading this market, I would want to know 2 things. One, how much of this is one-off, therefore temporary and reversible, and how much of it is underlying. And the second thing I would want to know is, does this change probabilities of a Fed hike in September? So, Steve, back to you.
I'm going to it right now. You keep talking.
At 92%.
Still at 92%?
For September.
Which I think is too low, by the way.
September's still 92. No change at all.
This doesn't do anything to throw it off, does it?
No change at all. No, it doesn't do anything to throw it off.
Why? You thought it would?
Yeah, I mean, I have a bias. I have a framing bias. Okay, I think people actually had a range all the way up to 5%. You remember what we heard from Gabriella at JP Morgan? They would say, I wouldn't be surprised, 3.8 to 5, right? This is towards the lower end of expectation.
What do you think the market reaction or lack thereof in a positive, I mean, this is a good number, says about the view of investors on where the Fed's going to move going forward?
I think it's within the margin of error, right? So I think the market's saying good number within the margin of error. We're not going to get too excited about this. If anything, it's slightly weaker than what we expected. But there's so much else going on, and we're only in July. So let's see what happens next 2 months.
Which, by the way, may also lead to your Fed scenario of not necessarily raising rates in September or not in September and December.
Right.
Which.
Yeah, I think the second one is what I would stress more, that we're unlikely to get 2 this year. On the timing, whether September or December, if this was the Yellen Fed, definitely it would be December. They'll want to keep options open. Okay. But under the Powell Fed, I'm not so sure.
We got to go, but Jim, do you agree with that? Because you've been calling, I thought, for two hikes for this year at minimum. No.
Oh, I don't know. I think 3. I think 3 hikes. 4. I think 4 became slightly more likely after the president's comments about the Fed. So hopefully the president will stop talking about the Fed and maybe we'll get 3.
Michael, we'll give you the final word. What should the Fed do?
I mean, I'm still a big fan of the Fed letting it run longer. I think that's actually where a lot of the real potential for productivity growth accelerating is going forward. I'm not convinced that we have an administration and sort of a public communication policy that's going to make that easy.